Well, hello guys, and welcome to another video. My name is Rocky Calvin, and I'm a trader. And in this video, we're going to be talking about liquidity. So, for beginners or people who don't really understand liquidity, so I'm going to be explaining in depth of what is liquidity, where to spot liquidity, and how to use liquidity because it really matters in trading. So, without wasting time, what is liquidity? So, liquidity refers to the areas in the market where a higher number of orders or stop losses like buy stops or sell stops are resting. So this area most of the time they do act like magnets, like price usually like going towards them. Okay. And the market entirely runs on liquidity because liquidity is like cash. It is the flow. It is what making things work, you see, because every trader is either buying or selling. So they're either buying or selling in either side of the market. So the market runs entirely based on liquidity. So a very good a very good example is if a trader wants to maybe buy an stock right now, they're gonna buy it using their funds, and now the markets, the algorithm will deliver that buy based on liquidity or using liquidity. If there's no liquidity that can drive that delivery, then the algorithm will do nothing. It will be useless. You'll find that the market is just consolidating and consolidating. Nothing is really happening. So uh, again, liquidity just refers to areas in the market where there's a higher number of orders, stop losses, for example, buy stops, take profits. Anywhere that you put a stop loss, anywhere that you put a take profit, all those are just liquidity points. Okay, so the market is engineered in a manner that it seeks these liquidity points, delivering price from discount to premium. So in this video, I'm going to be talking about ICT. Actually, this is an ICT concept. Okay, so there are different types of liquidity. For example, we have the buy side liquidity, and we also have the sell side liquidity. So buy-side liquidity refers to the areas in the market whereby orders like stop losses or breakout orders are clustered often above old highs or equal highs. Now, these levels attract liquidity for large players to sell into, often causing price reversal after the liquidity is taken. So, for example, this is a Nasdaq chart, and remember, I did analysis of this asset. I think it was yesterday, and I told you guys that Nasdaq is gonna be going up here. These are bearish daily fair value gap. We're gonna be tapping into it, then we start dropping. And as you can see today, price action has been kind of shitty. I did not really like the price action today. It's not been really good. You see how it has been moving around. It's more of a consolidative, but okay, Wednesday is more of that. So I expect tomorrow, that is a Thursday, to give us a reversal going down, and I say that we're likely to come down back. If we're coming down, we are going to be coming down into this. I think this is the weekly bullish fair value gap. Okay, so that was analysis I did on Nasdaq. But to explain buy side liquidity, let me do this to explain buy side liquidity. This was a price action today. This was exactly what happened here. So you see this swing high. This is a swing high. Okay, I'll go into deeper um, concept of where to spot liquidity and how to use them. Okay, so for example, above this high here, there was liquidity resting here. So the liquidity that was resting here was in form of sells, stop losses. Okay, meaning that sellers, people who sold, who are selling this, Nasdaq towards down here, most of them had put their stop loss here or somewhere around here. Okay, and also there are some people who have put their sell stops, like they they had put sell limit orders here. So it is waiting to be activated. So above here, there's liquidity, there's money resting here, a lot of money, a pool of money resting here. So what does a logarithm do? It consolidates, then comes in, purging there. Then it came back again, purging for the second time. Then what happens? It drops to take these lows here, which is the Asian. I think these are the Asian lows of a Wednesday. Yes, these are the Asian lows of Wednesday. So it drops here, and when it drops here, it also takes the liquidity of the Asian range. Okay, so it this was a buy side liquidity. Let me write it down. Let me type it. So this is a buy side liquidity. Okay, this is a buy side liquidity. So over here, there are some traders who saw things like, like maybe, okay, the retail traders, maybe they saw price. I mean, like they saw price coming from this zone here. Then they had maybe like a break of structure. Now they see this gap here. Now they're thinking, yes, now we're going higher. Now they they have put some buys here, and they expect price to really really go higher. But or some of them were waiting. Actually, this 15 minutes. If you go into 5 minutes, you realize that some traders were tricked into buying from here. Maybe let me go into 5 minutes and see. Yes, you see, for example, the way this candle closed, this one here. Some people would have just bought it here, or some people would just bought it here because they're seeing these gaps here. So they think now we are going higher. Now this, but you see, this is buy side liquidity resting above here. So once you understand that this is buy side liquidity, and if you wanted to sell, you are going to be waiting for maybe a fair value gap, a bearish fair value gap here created. But you see the bearish fair value gap we created here, price never really went back. It just dropped massively, and I think this was news. This was some red folder news happening at 15:15. Remember, I'm using UTC plus 3. So that is buy side liquidity. Again, let me repeat again. Buy side liquidity refers to areas in the market where buy orders like stop losses or breakout orders are clustered, and often, most of the time, above old highs or equal highs. Now, for example, this is an old high. Okay, so price had to come and tap in it. Then we drop down. When drop down, we are targeting the opposing liquidity. That is the now the sell side liquidity. So the second type of liquidity is the sell side. Yes, so sell-side liquidity. So sell-side liquidity often refers to areas also in the market where orders like stop losses or breakout, orders are clustered often below previous low or equal lows. So the only difference is that with sell-side is about the lows, okay? With the buy side, it's about the highs. So with the buy side, we either take equal highs, old highs, and with the sell side, we take equal lows or old lows. For example, down here, this is more of this is like an equal lows. You see this thing going, this kind of move here. But also, this is an Asian range liquidity of sell side. Okay, so for traders who wanted to buy from here, like for example, they would have waited, for maybe a bullish value gap, or but you see today's price action, to be honest, has been very very funny. Has been very tricky, as you can see. This price action here, it was not really good. It was not good at all. Not unless you knew the advance. I'll do another video after this video to show you how you can maneuver the market in such tricky market situations. There's always a way. Okay. So after that, I also want us to talk about now the discount and premium. Now that is now like literally the dealing range. That's what I'm talking about. The dealing range. Okay. So I want you to take a look at this. Maybe let me use this one. I'm gonna mark. Let's assume we this Wednesday. Okay. So if this is Wednesday, where did Wednesday begin from? It began from here. So this was the high, or maybe let me say until up to this point. Up to this point where the market is right now. This is the highest of the day, and this is the lowest of the day. Okay. think I should use this other tool. Where is it? Where is it? Where is it? Let me use this one because that one. Uh, the highest, then the lowest. Good. What I just did here is just I marked today's high. This is the highest point of today, and this is the lowest point of today. Okay? So I want to take a close look on what's happening here. Or I can as well use this tool here. Let me use this long position. Let me use this one so that you can be able to understand it well. Okay, perfect. So I want us to talk about discount and premium or dealing range. In this case, we are talking about the daily dealing range. So the daily dealing range is from the high of the day, current high of the day, because price will likely go above it. Once it goes above it, we adjust the the high to where the recent high is currently, or if it goes below before the day closes, that's where we also adjust the low, right? So up here, actually, I should have used sorry, I should have used this short, the short, so that we can really get a better idea. Better idea. Yes, like that. So what's really happening here is that up here is where we have the premium. So this is premium. This is premium, and down here is where you have the discount. Okay, and here is where you have the equilibrium, this mid area. Okay, right. I want to take a look closely. Premium, discount, equilibrium. Okay? Equilibrium is the midpoint of the dealing range. And remember, the dealing range, I've marked the high of the day, the current high of the day, and I've also marked our low of the day. So dealing range can depend on whether you want a dealing range of a session, a dealing range of a weekly profile, a dealing range of a daily profile, a dealing range of even monthly profile, depending on what you want. So if I wanted to know the dealing range of a weekly profile, this current week, I'll go to where Monday is. So for example, Monday, we have our Monday right here. So I'll go to where Monday begins. uh, I'll jump into 15 minutes for this one so that the chart can be a little bit presentable. So where's Monday? Where did you open on Monday? Yes, we opened around here. Around here. Around here. Where is it? Yes, here. Right there. So we opened Monday here. We jumped below. So apparently this is the low of the week. This one here. This is the low of the week. So let me use this chart position. This is the low of the week. And uh, sorry, let me there's this tool here, there's this tool, yes, this one here, and the high of the week is the current high that we're in. Remember, the week has not yet completed. So if you want a weekly profile, remember, this is how you can know the weekly discount and premium PD arrays. Okay, so this is gonna be the equilibrium. I'm just trying to push this one down here. Equilibrium, discount, this there. So sorry, this is the discount, this is the premium. Okay, discount, premium, equilibrium. Okay, so meaning that apparently on a weekly profile we are on premium, meaning that, as I told you on the other analysis, we are supposed to be looking for sales in the next coming day once we tap into this bearish daily fair value gap, because we will be in premium. So we sell in premium and buy in discount. When we're in equilibrium, Equilibrium now needs a more technical side of understanding, which I will not go into deeply in this video. Okay, so I think I'm gonna stop with this one here, and I hope to see you guys in the next video. If you have any question or if you have anything that you'd like me to cover, just let me know in the comment section. Please hit like and subscribe, and see you in the next one.